Alright everybody, welcome back to the TA Trades channel, and boy, today do I have an episode for you guys. I'm going to be breaking down Bitcoin and the crypto market, specifically what my projections are that are going to be for the next bull run. I'm very excited to bring this video. I'm going to be giving you guys an in-depth analysis of Bitcoin, specifically where I believe my projections are going to be, breaking down my in-depth analysis and how I trade, and hopefully it could help you. If not, hopefully you learn something and maybe you can take that, apply it to your trading, or kind of get a better idea of where you think, get a gauge of where you think the market's headed. If you guys stay towards the end of the video, I'm going to be dropping some crypto trends to look forward to in this next bull run. I think it could help everyone kind of capitalize in the future, or in this bull run, and really, double, maybe even triple your money in this next bull run. So without further ado, let's go ahead and jump into the video. Before we get started, I want to make this disclaimer and note that this is all for educational purposes. I am not trying to tell anyone to make financial decisions or promote any type of financial decisions here, but specifically my analysis, what I'm seeing the markets do. I'm going to be breaking it down little by little, and yeah, I'm not a financial advisor, so without further ado, let's go ahead and jump right into this. So first things first, there are about 3 things that I use overall in my trading. I'm going to give you guys kind of my references. Number 1, ICT, Inner Circle Trader on YouTube. I use a lot of his concepts. I also do subscribe to the Doubling Theory by Jean-Pierre Garnier. I believe that's how you say it, Mallet. I do use some of his theories using statistical probability. I'm gonna not really go in depth. This is not a video for that, to kind of go in depth, but feel free to kind of look this up, do your own research there, and also use the Fibonacci sequence, in my analysis to kind of be able to double things out in time and kind of really be able to kind of create those projections overall. It's what has worked for me so far, and I have receipts. I'll be showing you guys the receipts here towards the end of the video as well, of just the different analysis I've had this year and stuff like that. So let's go ahead and break it down. First things first, let's go ahead and do this on a higher time frame. Right, this is a 12-month time frame, as you can see from above, 12M. So this is a yearly chart that we're currently looking at. Price, obviously, on a yearly time frame has come up, with the insane monetary spending, has come up to all the way, I believe the high was 69, was it like 206, what was the high, 69, yeah, the high was 69,000, before coming down, and we've, for those of you that don't know, crypto's been bearish for the last year or so, and finally, we're starting to see some bullishness, and things are starting to ramp back up again. So on a higher time frame, we've kind of come up into the high and have come down. We've tapped this higher time frame breaker here, and inside this fair value gap here. So first things first, I want to show you guys how I build my projections. So there's not much data to work here with, but I've back tested this with Bitcoin and it does work very, very well. This is just because it's on a higher time frame. We've only seen it happen twice so far. So basically, using the doubling theory and the Fibonacci sequence, right? Using the data that's here from the open to close, that's the only data I care about when it comes to price. Using the open to close and, how data lies within a plot, a histogram, right? Let me draw it out for you guys. How data, if those of you that ever took a stats class, and kind of, this kind of explains it, but if you ever took, and you did this, oh wow, you ever took a stats class and did a C-score, right? And how they told you one standard deviation, right? One standard deviation from the mean, right, lies 68% of the data, and then 2 standard deviations, from the mean lies 95% of the data, and then 3% or 3 standard deviations over from the mean lies 99% of the data. So I'm kind of using that statistical kind of probability in my doubling theory, using this data, this range of data as my sort of mean, right? Using that, and kind of doubling it with use the Fibonacci sequence. So ideally, from open to close, as you can see, the last bull run with price came up right into the 3 standard deviations, which is where 99% of the data doubled in theory should tap. And as you can see, price ended up closing. We don't really care much about the wicks, right? We only care about candle closures here, at least when I do my analysis. So therefore, we still closed inside the 99%. Obviously, we overextended. With crypto, you're gonna have some level of variance of deviation. You're gonna have a percent of error. That's okay. I'm willing to accept that. So real time looking at it, right? So price has now come down into a higher time frame fair value gap here, and a breaker here, right? Using order block theory, I believe looking at the 1 year chart right now, we are inside what I believe is a higher time frame order block that's being formed. Real time currently, I believe today is December 13th. Recording time right now is 5:05 p.m. Eastern Standard Time. So real time price is in at 43.075. I'm going to make this very bold claim. Before the end of 2020 or 2023, before the end of 2023, price will close at or above 48,400. We are going to see that. We are going to see a yearly close at or above 400. And we're going to come back to this video January 1st and 2024. And we're going to see if I'm correct with my prediction, right? That's using order block theory. So using the Fibonacci sequence, doubling theory, my analysis overall, inside of order block, what you can do is, take the down closed candle. So this range again, I'm going to take this down closed candle in this bearish market from open to close. I want to just see the open to close. So the opened at 46,230. So I'm going to come here, 46,230. I want to make exact points and references, right? The close was at 16,528, and I'm referring up here. If you come up here, as you can see where it says C, I'm referring up there, and that's going to be 16,528. So 16,528. So now that we have that open to close, I always mark out the 50%. So the 50% is 31,379. So I'm going to put my horizontal ray, 379. So we have that because that's the equilibrium of the down close candle and of the higher time frame order block that I believe is being formed, which an order block is simply a change in the state of delivery and price. Right, it's the last either consecutive down close candles. It could be the last down close candle followed by a huge displacement move that changes the state of delivery. So what does that mean? It changes the state of delivery in price from like bullish to bearish, bearish to bullish. So I believe we're on a yearly time frame order block, or a yearly time frame order block is being created. Right, real time right now. Typically, price will come back to the 50% of it, which is why I just marked the equilibrium of that range. Right. So the mean, essentially, the 50%, which is the mean. So that's the mean. This is your range, the range in data. And all you're doing is you're doubling that range out. So typically the biggest two things I look for, I don't care about 3 standard deviations. I want, from a statistical probability, I want where 68% of the data that's doubled out in time, where that's going to be. So therefore, I want to see 1 standard deviation, which that puts us at 75,932. 75,932. I'm going to go ahead. 932. 75,932. And then I also look at 2 standard deviations. Why do I look at 2 standard deviations and a 1 standard? Because 2 standard deviations from the mean, from the 50% of this range, right? 2 standard is where 99 or 95% of the data lies within that range. So therefore, I like to look at the 2nd standard deviation. Now, that puts us at 105,634, right? 105,634. 634. So, based on, algorithms, statistical probability, the doubling theory, the Fibonacci sequence, doubled out in time, I'm expecting price to, at bare minimum, tap 75,000, at least Bitcoin, 75,932. So we'll call it 76,000 even for Bitcoin in this next bull run. That's 1 standard deviation over. We could go as high as 2 standard deviations. My biggest focus, I like low hanging fruit objectives. I like to go to where is the minimal amount that I can make money on. Therefore, my higher time frame target, my goal, where I'm starting to go ahead and cut, take some partials, take profits, do whatnot on a higher time frame basis for my crypto portfolio will be at $76,000. I believe 100% with 95% certainty that 2024, 2025 in the bull run that happens, Bitcoin will see 76,000. I'm calling it right now, real time, December 3rd, 2023. Right now, I'm calling it. I believe Bitcoin will, at some point, I believe Bitcoin by either 2024 or 2025 will tap that higher time frame objective for me, which is 75,000 or 75,932. 76,000, let's call it. So on a higher time frame, what continues to support this order block theory, right? So let's go down to lower time frames and start to really break this down. Where we are at, where I probably cannot see price go lower than, and stuff like that. So on a 6-month time frame, all you see is the two down close candles here, and price continuing to support the order block theory that's being formed. 2 down close candles here that were 2 consecutive down close candles right here, and how price was supporting that there. 3-month time frame, you can see the order block being formed a little bit better here with this huge down close candle, followed by a huge up move here. That's changing the state of delivery and price, right? That's happening. We can start seeing that here. So something to note, right? Using order block theory. So with the idea that I believe that an order block was to be formed here, I personally would want to be bullish in a discount under 50%. So by the end of this video, what I'm going to show you guys is, I believe in March 31st is when I called the first, when I called bottom for the first time. I sent out a markup, and then once again I called bottom again, I believe in November, before the market really started to rally. I believe November 11th. Don't quote me on that. It's in my Telegram chat. You guys feel free to join that. I drop a lot of analysis there, in-depth analysis on certain pairs. So yeah, anyways, back to the video. So looking at price, right, you want to be bullish ultimately under the 50% of the order block. So this whole time you could have been accumulating, and I believe 26.19 was my entry target. And that's what I believe I called in the chat. Again, we're gonna go to the Telegram chat. I have receipts for all this. That's the beauty of having, I guess, a chat. But yeah, so coming down into the 1 hour, using order block theory. Before we even jump down into this, using order block theory, if this is truly an order block that's being formed, what I have come to realize, an observation that I have made using ICT concepts, is price tends to leave a fair value gap at the 50% of the higher time frame, at the higher time frame fair value gap, or at the higher time frame order block. So we are sitting inside a 12-month. We are sitting inside a 12-month order block right now that's about to be formed. It's not technically formed yet, but I'm trading with the guys in the idea that it is going to be formed, which is why I have a strong belief that by the end of this year we will be at or above 48,400. So therefore, when we come down to a 1 month time frame, what do you see at the exact 50%? Well, we see a fair value gap that was created. That's amazing. I know. When you know that. Anyways, coming down into the weekly, right? Because now price has offered buy side, right? Because price has now offered buy side down here. Sell side. It's offered sell side delivery down here by selling down into this higher time frame inefficiency, this fair value gap here on a one. Let's go back to the 1 month time frame so I can show you guys. So we have this fair value gap here. This is kind of a little bit more clear on the breaker. Kind of need to zoom in a little bit on even a lower time frame to show you that breaker. But we have this fair value gap here. That price kind of came down and filled that inefficiency down here. So on a weekly time frame, we came down, we filled that inefficiency, and now this last down close candle followed by a huge up move that changed the state of delivery, right? The most recent high, this is price had lower, we had lower high, lower low, lower high, lower low, higher high, higher low. Changed the state of delivery in price. This is our order block. Price came inside the order block. It shot higher. So because we've now offered sell side here, and we have this huge inefficiency in price, and price has come up, right? It has come up, created another order block here, shot higher, and now has displaced above this old inefficiency. I believe we are now in a higher time frame balanced price range. So the order block starts here, works its way all the way down here. So as you can see, because price, did not dig any lower and it respected this little fair value gap here, and it refused to go lower, that lets me know that, hey, we are in a balanced price range because price has done what? It's offered sell side, it's offered buy side, and it's rebalanced the buy side. So now this is a balanced price range. So therefore, we can look for price to continue to go higher on a higher time frame. So on a 1 day time frame, which as you can see, real time, we're shooting. What do we have here, up here? Which I believe it's at 40, right here. It's 43. It's so funny. It's at 48, 366. These are relatively equal highs. So essentially what we're sitting in is a higher time frame sell model, right? We have the original consolidation or leg 1, leg 2 into a higher time frame inefficiency, and it takes liquidity. Price comes up, right? It accumulates, creates our first leg, and then that's your leg 1, leg 2 here, and then boom, it just shoots higher towards what? These relative equal highs. Price is after these relative equal highs. That's our area of, that's our area of liquidity in which price is after. If we go back to the 12-month time frame, that high is also the yearly high. So therefore, once again, I believe, and I'm gonna keep saying this, I believe by the end of this year, we will see that high get taken. We are in a higher time frame order block. So with Bitcoin shooting higher, every other crypto is going to start making its bull run. I think Bitcoin, like I said, it's headed to that 1 standard deviation. I think we're going to continue higher going into tomorrow. So real time currently it's December. As you can see, we're sitting into, or the daily is about to close here in an hour. I see this closing above this daily and this turning into a complete order block. If it does, any type of entry inside this order block with a stop loss under this daily low should help you, or should continue bullish towards 48,366. And that's where I think, the market's overall headed, and where it's going to head and end up closing there towards the end of the year. So yeah, that's my in-depth analysis. Again, I am making strong probability here of where I think the market's going. And I'm making very bold claims, and we'll see, what exactly happens. But just for kind of, I guess you say receipts, I dropped a higher time frame analysis here. Let's make sure. So March 21st, this is March 21st of this year. As you can see here, dates don't lie. March 21st, 2023. If Bitcoin comes back to, I will look for a long-term buy into 33K. I changed that. So yeah, here we are, July 16th. As you can see, letting you guys know, hey, as I stated a couple weeks ago, we have now officially entered a bull market into crypto. Let the chat know, you guys. And I believe I sent out one last one on July 24th. Where was it at? July 24th. Once again, I will make this statement again. Refer to the loser. Crypto is near its bottom. The new cycle is soon to begin. So I've been bullish on crypto since July. I've really been bullish since March on crypto. I believe we've bottomed a while ago. Overall, the results have spoken for themselves. I dropped a chart for you guys, and here we are now at 43,000. I believe we're going to go higher, way much higher. And overall to end of the year, my claim stays the same. Some of the big key projects I feel like everyone needs to keep a lookout, or even trends I guess you can call them, is interoperability. When it comes to any type of interoperability, crypto. So tokenization is going to be another one. And that's basically, any crypto that's involved in tokenizing some form of asset into a crypto. So like anything that involves real estate, anything that has to do, smart contracts towards some type of tokenization of some type of asset in real time. And finally, everyone's probably been hearing about this, you know, with the GPU computing, anything AI related when it comes to crypto. I believe in this next bull run is going to run. And if you guys want a list of certain cryptos that I'm in that category, feel free, join the free Telegram chat. I would love to see you guys there. It's a really good community, and I'd love to hear from you guys. But yeah, without further ado, that's, you know, the end of my episode. I hope you guys enjoyed this. That's my in-depth analysis. Like I said, I believe crypto, we're doomed, or we're due for a huge bull run come 2024, 2025, and I'm very excited for it. I'm looking forward to it. So I hope you guys enjoyed this video. Hope you guys got some value out of this video. Hope you guys can see, you know, my analysis, kind of what I'm looking for. And what I'm expected, you know, what is expected to come in the future, or what is expected to come out of crypto here in the future, or Bitcoin specifically with the crypto market. If you guys like this video, feel free, like, comment, subscribe. Comment down below if you guys want me to drop a full-on crypto list. I've already dropped one in my Telegram chat. A lot of those cryptos are now, I mean, plus, you know, one of them, Link, I believe, went to like 160%. So feel free, comment down. I can make a video about that, of, you know, big crypto projects I'm looking forward to. But again, this bull run is starting. I'm stating it with full confidence here, real time, December 13th, 2023. And we're going to see what happens in a year from now. So I hope you guys enjoyed this video. I hope you guys got some value. I will see you guys in the next one.